Alright, so let's say you decided that you would like to invest in a stock market, but you don't really know where to get started. There are so many applications out there that you can download and use nowadays for investing, and they all come with different features and fees, and really, it's just so easy to get lost. You're probably asking yourself a couple of questions that also I was asking for myself. Is this application even available for me? Can I invest my money in it safely? Is it really free when they say it's free? Do I get the ownership of the shares that I'm buying? Or what kind of assets am I able to obtain? In this video, I'm going to review 3 applications that are now very famous in Europe, namely Revolut, eToro, and Trading212, and give you all the answers to all the questions that you might have. So especially if you were following the events last week around GameStop and Robinhood, this video might be of particular interest for you. Now, before I get started, I just want to make sure that you know that I'm not a financial advisor, I'm not an expert, and none of the things I'm saying here is actual recommendation. I'm just an ordinary guy trying to understand the world of finance. So let's talk a bit about the fundamentals first. I personally started to use Revolut first, mainly because of the services they offer as a challenger bank. They provide very low-cost ATM withdrawals and currency conversions, so it's very good for travelers. If you already have a Revolut account, opening a separate trading account in Revolut is fairly simple, and it will be also very easy to transfer your funds from one account to the other and withdraw your money once you invested it and successfully gained some profit on it and you want to take it back into your hands. eToro and Trading212, on the other hand, they only offer their services as a platform for investment. It means that you need to have a separate bank account to transfer your money into these platforms, and also when you want to withdraw your money, it might mean that you will need to wait a bit longer, and there can be also some extra costs associated with that. Revolut and Trading212 are both from London, which means that they currently have to deal with the implication of Brexit, whereas eToro comes from Israel. Based on the numbers available on the internet, all of these companies have more than 10 million users, which means that it's quite a solid user base, and you don't really need to worry that they would go out of business anytime soon. Before you decide which platform to choose for yourself, I think one of the first things you will need to understand is whether you can even access the services in your country. And in Europe, all the 3 give you the possibility. However, if you are from the US, China, or Canada, you will not be able to use the services of eToro and Trading212 to buy and sell stocks. If you are from the rest of the world, your best chances are probably with eToro or Trading212, as they operate in more than 100 countries. As opposed to that, Revolut is only present in 35 countries, however, you can use their services in US and Canada. Anyway, you can check the description down below, because I will share the link where you can find where are all these tools available. Now that the boring fundamentals are sorted out, let's take a look at the real stuff. What kind of products do they offer and services, and how much does it really cost? So my personal interest is mainly around investing in a US stock market. And the reason for that is mainly that you can just find so much stuff available on the internet to read, some news, and everything is available in English. So luckily, all 3 platforms offer access to the New York Stock Exchange and Nasdaq, so in principle, they are quite similar. What it seems to me is that Revolut has, let's say, the most narrow opportunities when it comes to the instruments that you can trade, and eToro and Trading212 offers a bit broader selections. So when it comes to stock trading, Revolut really only offers you to buy and sell shares of individual companies, whereas eToro and Trading212 gives you the possibility to have access to ETFs as well and CFD. Now, if you don't know what is an ETF or CFD, no worries, I will make an upcoming video to cover this topic. But in general, I'm not really interested to trade CFDs because I consider it to be quite of a risky instrument. However, not having ETFs available on Revolut, I think it's a major shortcoming, and this should be improved upon. Anyway, Revolut stated that they are working on it, so I really hope that it will become available soon. When it comes to the number of exchanges, it's actually eToro that's the clear winner. Besides Nasdaq and New York, they grant you access to companies listed on European exchanges such as Frankfurt, Paris, London, Madrid, you name it. eToro offers a total of 17 exchanges, which can be quite interesting for people who are either born or live in this country and have access to news or market information so that they can use it for their benefit. The second place here goes to Trading212, that gives you access to Frankfurt, London, Amsterdam, Madrid and Zurich besides the American ones. However, if you want to trade ETFs, that's only available in Frankfurt and London. As for the number of instruments, Trading212 comes in at the first place. According to their website, they offer access to more than 10,000 instruments, That's insane. Second is eToro with something over 2,400 and Revolut somewhere around 900. One strategy that one might consider then is that just to register in all of these platforms, which is exactly what I did, so that if I find a particular instrument interesting, I can look it up, which platform offers it, and then I can invest it in that particular one. Okay, so what about the fees? Apparently all of these companies are offering commission-free trading. So it should mean that it's free, right? Well, if you consider that that might be something fishy behind that, you are probably right. When you see commission-free trading, it literally only means that the company or the platform doesn't charge you for execution of the trade itself. But there can be a range of other ways how they can actually get money from you and you are eventually paying for them. And to be honest, paying for the service is definitely not bad, especially when it's about trusting your money on somebody else. Eventually, they are for-profit companies. They have to make some money somehow. The only concern is how much do you have to pay and where really the money goes and how transparent it is. So when you're evaluating a platform about the fee perspective, there are a range of topics that you should pay attention to. The first one is you need to check what is the minimum amount of deposit, because this is kind of the money that you need to commit to even start investing. Then you should check if there's any kind of fee associated with depositing the money, or if there's a conversion fee which you have to pay because the account is in a given currency and the platform converts it for you. Then you should also pay attention to what free trading really means, because there might be that there's some limitation to the number of transactions that you can do either on a daily or monthly basis, or perhaps there's some kind of spread included which is not actually the cost of the trade itself, but eventually you are still paying for it. You might also need to pay for custody, which means that really you're just paying for somebody else for keeping your money. Of course, you should also check if you need to pay for getting your money back, which is, eventually kind of important. And you should also check out if there is any kind of other fee that is not explicitly stated anywhere, but you have to pay for it. So let's check how is it gonna play out for the three different platforms. On Revolut, in case you want to transfer money to your trading account, first you have to top up your Revolut account from your bank account. Once you have your money in your Revolut account, you can very easily transfer it to your trading account. And the minimum amount is gonna be around 10 euros or $20. It depends on the currency that you use, but it's fairly low. Now, one thing that is very important in this case is always that you have to check what is the base currency in the trading platform. In the case of Revolut, it's US dollars. So if you transfer US dollars from your Revolut account to your trading account, it's gonna be one-to-one conversion. However, if you need to use another currency, you will get the internal conversion rates from Revolut, which are, I would say, quite fair. There's no extra fee for converting your currency as long as you're transferring your money on weekdays. But as anyway, the stock market is closed on the weekends, you should just really pay attention that you transfer money to your trading account only during the weekdays. Once you've deposited your money to your trading account, you can start trading immediately. In the case of Revolut, they will offer you 3 free trades over 1 month. Afterwards, you have to pay €1 more or less, or £1 for each transaction that you're aiming to execute. Besides this, Revolut will also charge you a custody fee, which equals to the 0.01% of your account holdings over the course of 1 year, paid in monthly installments. It means that in case you have $10,000 in stocks, then over the course of 1 year, you will have to pay $1 for Revolut for keeping your stocks for you. Now, when it comes to eToro, things become a bit more tricky. When you register for the first time, you will be asked to deposit quite a significant amount, but it depends on the region where you're using it. In my case, as a user from Poland, I was asked to deposit $500, which I would say is quite a significant amount to commit in the very beginning. eToro also won't charge you for depositing your money per se. However, you will have to be very careful in choosing the currency that you deposit. In eToro's case, also their accounts are based in USD. However, they will be more than happy to receive your non-dollar currency and convert it to you for their own fees. Now, I was quite shocked when I figured out that they charged me almost 3% of the amount that I deposited in Polish zloty to convert it to US dollars. Once your money is in the account, you can start trading with the money that you have. And just to figure out that, well, actually the costs of buying and selling your shares are not exactly the same as the market price. eToro will charge you a spread, which means that you will be able to sell your assets a bit less for what they're worth and you can buy them for a bit more. This is one way how eToro makes money, and this is one way how you are losing it. Now, the amount of this spread is not really huge. For me, it seems it's approximately 0.5% plus minus of the value of the share actually that you are aiming to buy or sell. However, if you add it up, it starts to be quite a considerable amount of money if you do it in repetitive trades. So I would say this is just something that is worth keeping your eye on. Additionally, eToro will charge you a $5 fee in case you want to get your money back. So let's imagine you want to withdraw $1,000, you will have to pay 0.5% extra just to get your money back. On top of this, eToro will also charge you a $10 annual inactivity fee in case you're not using your account. Now, when it comes to the fees, I think trading 212 seems to be the best option because first of all, you can really start investing from as little as €1 in the account, and they don't charge you with any cost at depositing your money. If you use your bank account, it's really free. On this platform, when you're buying shares, you actually get the real market price, and the only time you really have to pay is when you're selling your assets, because there's a built-in approximately 0.5% spread that you will need to pay for trading 212. Since these numbers in themselves might be hard to comprehend, I set up a tiny scenario where we can estimate how much money we are actually making. For this calculation, I assume that every single month you deposit $100 to your account and you buy 4 different stocks of different companies. Let's also assume that there's a 1% increase in the value of your investment every month for a total 12% over the year. This is an above average year on the US stock market. However, last year I would say was pretty good benchmark for this. After taking into account all the fees that you have to pay on the respective platforms, we find that you're able to withdraw after 1 year from Revolut $1,267 as compared to eToro's $1,263 and trading 212's $1,274. Now, the difference between these numbers may not seem very huge. It's gonna be a different scenario when you look at how much money you actually make compared to $1,200 that you deposited. In this sense, you can calculate some sort of return on investment, and I'm gonna put the numbers here so you can see that it's quite a huge difference between the best platform and the worst platform. So now that we have covered the dirty finances, let's talk a bit about safety and the regulatory aspects of these platforms. One of the most important things here to understand is what really happens to your money once you deposit to the account and what happens to it in case the company goes bankrupt. Will you be able to somehow recover it? Is there some sort of insurance? And what kind of claims can you make? Now, first, looking at the case of Revolut, it's a bit special because they both are trying to be somehow a bank as well as a platform for investing. Now, Revolut, as an electronic money institute, is required to keep your funds in a safeguarded account, which means that in case Revolut will go bankrupt, they will not be able to use your funds to pay for their insolvency. Now, this is true for your cash, but what happens to your stocks? Now, Revolut has an agreement with DriveWealth LLC, which is basically a third-party broker registered in the United States. When you execute an order on Revolut, eventually DriveWealth will be your clearing agent and as well as your custodian. Yeah, fancy expressions. What do they really mean? The shares that you buy will be under the name of the brokerage in something what's called an omnibus account. So in a sense, the shares will be actually owned by the brokerage, but you will get a contract that states that you have rights to the shares that you were buying. But why is it advantageous, you may ask? Why is it like this? Doesn't it sound a bit fishy? Now imagine that there are millions of customers of this brokerage and all of them want to buy and sell assets. With the omnibus model, the brokerage will not have to essentially perform millions of transactions, only reassign who owns which parts of what shares. These kinds of accounts are actually quite safe as they are very well regulated by the United States Securities and Exchange Commission, and it's actually a key point that enables fast and low-cost transactions on the stock market. DriveWealth is also a member of the Securities Investor Protection Corporation, or the SIPC, which is a US non-profit organization that allows up to $500,000 protection of the securities and cash held in your account. Now the situation is pretty much the same when it comes to Trading 212, however their collaboration is with Interactive Brokers, which is just another firm. Interactive Brokers also works with omnibus accounts, and as well they are SIPC insured. Now when it comes to the security in eToro, I have to say it's a bit more sketchy. eToro does not have an agreement with a third-party broker, which means that they will be the broker for you, they will be the ones carrying out the transaction for you. Okay, that's fine. But what about the custody? Now, if you start to look into the terms and conditions of eToro Europe, you will find a few, I would say, quite interesting points there. If you check their Schedule B, which is about investing in securities, and the custody point, they basically mention that, well, they are going to be your custodian, but they also mention that they might actually provide the custody to somebody else, and it's not really defined who this other party is. They also specify that they are not responsible for any kind of activities or the insolvency of this sub-custodian. Reading further, point 9.5 specifies that there might be situations where the sub-custodian can actually get rid of your shares and just cover its own liabilities. And if it wasn't sketchy enough, then if you Google, is eToro SIPC insured, you will figure out that, well, no, it's not. In fact, it will tell you, if you Google this, the first response is from eToro, and it says that yes, if you're a US citizen, your funds are FDIC insured. However, you have to make sure that you understand that FDIC insurance is not the same as SIPC. It only covers cash in your account, and it's not related to the securities that you own. So in my humble personal opinion, the security measures in eToro are somewhat concerning, and I would prefer to keep my money in Revolut or Trading 212 if it's a larger amount. By the way, if you're an owner or shareholder of a company, you also have voting rights. And this is something that you can exercise once there are some kind of questions that are arising related to the management of the company. And out of these three platforms, it's only Revolut that offers you the right to exercise your voting rights. Now, before I finish this video, there's one more topic that I really have to touch upon, which is related to how these different platforms were handling the situation with GME and AMC stock in the last weeks. Now, if you don't know the story, or if you just want to learn more about it, please make sure that you check out the description down below this video, because I'm going to share a lot of links and information about everything that I'm talking here. In case you haven't yet heard, there was an ongoing battle between the evil institutional investors of Wall Street and the large number of retail investors who happened to read Reddit and happened to like the stock and happened to have diamond hands. So as the price of GME and AMC was about to skyrocket and go to the moon, people got super angry and pissed because some of the brokerages just limited the option to trade these kind of instruments. Out of the three platforms that I was talking about today, also eToro and Trading 212 followed what Robinhood was doing, and they already limited the trading actions last week. And as I was just about to say how I respect Revolut for not doing this, today I just got the information on my application that, well, from now on you can only sell GME and AMC and you cannot really buy it. Alright, so let's sum it up. What's the verdict? Which platform should you use? Now, if you're really new to stock market trading, then I would recommend that you either try Revolut or Trading 212. The thing I like about Trading 212 is that they have some couple of extra features compared to Revolut. For example, there's an automatic dividend reinvestment option, or they provide you with much more materials about learning. Also, they really give you a web-based platform for trading, which Revolut does lack, as well as their fees are slightly better than Revolut on a standard account. But if you already have a Revolut account just for traveling, which, well, probably last year you couldn't do that much, then it might be interesting for you to just start with that, because then you can keep yourself on the same platform. Also, I really like the concept that I just very easily can access the money that I earn on stock market just by getting it out. Once you sell your stocks, it takes 3 days until the transaction is settled, and then you can withdraw the money from your trading account to your Revolut account, and it just makes it so easy for me. So far I haven't been super nice with eToro because, to be honest, I don't really like how they structure their fees, as well as I have a lot of concerns with their security. However, there's one feature that I kind of think it's interesting, and is about them, is the social trading. eToro social trading allows you to copy other people's trading strategies. Well, I myself would not do it. However, there's one thing that's very interesting about it. You can become a popular investor, and if other people copy your trades and you make profit on that, then more people will be happy to do that. And you can get a very nice bonus from eToro in case there are more people copying you. Honestly, I'm quite excited about this feature, and I think I will use eToro for this, to check what is the minimum amount that I need to risk to be able to get followers and get other people copy my amazing strategy that I'm going to develop and share with you, of course. So with this, I'm gonna wrap up this video, and thank you very much if you're still here and you were watching the whole. If you find it interesting and if you think the content is something that you would like to get more of, please make sure that you like and subscribe, because that will help me a lot to reach more people with whatever I'm creating here. Also, I would love to read your thoughts and comments down below in the comment section. How did you like this video? What should I improve in it? Is there any kind of information that you were missing? Because that would help me grow and to make just a better content for you next time. So thank you for watching, and I'll see you in the next one. Bye bye.